Hey traders, this is Heather, and wow, the markets hit another new all-time high today. That's not really, I don't know, that's not as special of a phrase as it used to be. I'll tell you what I mean. So far, we're midway into May. This month, SPX has had 7 new all-time highs just this month, and we're only halfway through the month. We've only had 10 trading days this month, and 7 of them we have hit new all-time highs. And then if you just look back at this run that we have had ever since, the last day in March, we haven't even had that many red days. 1, 2, 3, 4, 5, 6, 7 red days. We've only had 7 days where we closed lower than where we opened in the last month and a half. So it's pretty wild. NDX, the Qs look pretty much the same. I didn't actually do the count on new all-time highs, but I would imagine if it's not exactly the same, it's probably very similar. New all-time highs in the NASDAQ as well. What's cool about the NASDAQ is look how yesterday it popped up, it hit this fire line, and then today it actually broke above it. Now, it doesn't mean that it will keep going tomorrow. It might not. And remember, tomorrow's OPEX, so there could be some shenanigans. Although, as I pointed out in the small lot trading room, today's shenanigans could just be to the upside. Anyways, tomorrow's OPEX, we can't forget that. So yeah, I'm not sure how the NASDAQ will react to this fire line right here. Typically what we see around fire lines, or at least what I have noticed, is that we'll get a few days trading in right around it, bouncing around it before it either breaks out or breaks down. So we'll see if that happens in this case as well. Look at this. I want to point this out. This is the +3 ATR line right up here. This big, thicker one in the middle, that's the daily 21. This is +3 ATR. Ever since, so for the last month, middle of April, NASDAQ and pretty much S&Ps as well has been riding this +3 ATR. That is very rare. And then in the last week and a half, it's broken above that. I mean, this is just an incredibly strong market. So here's the difficulty in this type of market. It's awesome, right? Also, really difficult to trade because on the one hand, at least for me, because I'm not a breakout trader, so it's hard to buy something when it is hitting all-time highs. Also can't short something that is this aggressively bullish. So how do we trade this? So I'm going to show you what I do in this type of a market environment. So normally what we look for in a bullish uptrend is we look for price to hit +2 or +3 ATR and then come back down to rest at the rising daily 21 before it makes its next leg higher. Well, we are not getting those pullbacks to the daily 21. We're just not. So we have to look for faster moving averages, the daily 5 or the daily 8. That's pretty much all we are getting right now. So I'm going to bring over my 30-minute chart right here. And we can look at price action on SPX intraday. And I'm going to point something out. So even though this is the 30-minute chart, what I have plotted on here is the daily 5. That's this little teal aqua line. And then the daily 8, which is this bright yellow line, kind of mustardy line. Okay, so if you notice, when price pulls back, where does it go? It's only going to the daily 5, then it's making its next run higher. This was Tuesday. Actually got, a giant pullback to the daily 8. Who would have thought it could make it that far? And now we've just rocketed higher. So look, whenever we do get the next pullback, and it could be tomorrow, it could be next week, I would look for it to come back down to the daily 5. But the daily 5 is going higher. It's a rising daily 5. So even though it closed at 74.30 today, by the time price actually pulls back to it, might be up at 74.60, 74.70, something like that. We'll just have to wait and see. But break your charts down into smaller time frames and or put faster moving averages on your daily chart. Daily 5 and daily 5, a lot of times that's all we can hope to get. And then this is what I want you to wait for, okay? And you can do it on any ticker that is in this aggressive time frame uptrend. I'm showing you SPX right now, but you could do it on, any of the stocks that are making new all-time highs right now, like Nvidia, or I think LRCX just made a new all-time high as well. Okay, so break it down to a 30-minute chart. And then I want you to look at the squeeze and wait for a squeeze on the 30-minute time frame. If you can get a pullback down to or close to the daily 5 and get a 30-minute squeeze, you can trade that to the upside and trade it for a smaller move. You're not going to get as giant of a pop off of a 30-minute squeeze, but you will get a pop. And as long as, as long as things keep rallying the way they are, maybe you do get the pop that you need. Maybe you do. But anyways, pull back to daily 5, 30-minute squeeze. And then here's the trick too, is don't go as far out in time. This is going to be a shorter trade where we're not looking for as big of a move. So what I'm talking about would be either for this Friday, if it's early in the week, or next Friday. So for example, today is Thursday. I wouldn't open a trade up for tomorrow. I would want it to be, at least 3 or 4 days till expiration. So because today is Thursday, if I were to open up one of these trades, I would be looking at next Friday, the 22nd. Okay, so let's look at some stocks. I'll show you an example of one where this happened. Okay, so right back here, it was actually just yesterday on Walmart. You got this pullback to the daily 5 and daily 8. They were pretty close to one another. And then you got this 30-minute squeeze, and then look what happened today. Whoops. Popped right up, okay? And then hopefully it keeps going, for a couple more days. But that is what we are looking for. Let me show you some that are setting up right now for potential trades that I was looking for. So LUNR. Now this one started to fire already. You can tell by the black dot that it's starting to fire. And look, it already bounced off of that daily 5. So it's a little bit extended, but this could be one to watch. Nvidia does, look at this. In the last 5 minutes or 30 minutes of the day, it did start to develop a 30-minute squeeze. Okay, so it is still too far from the daily 5. So there's one of two scenarios that you could look for. You could either look for that pullback to the rising daily 5 while it remains in a 30-minute squeeze, or another scenario is that price keeps trading sideways like this while the daily 5 comes up to meet it. And then as long as it's in that squeeze still, you could look to open up a trade for a week or a few days out. All right. NVIDIA is nice because it has those Monday, Wednesday, Friday expirations. So you can play with that too. It doesn't necessarily have to be on a Friday. You could just go 1 week out. That's kind of cool. I didn't think about that. All right. So let's go through a few more that I found in a 30-minute squeeze. Although, full disclosure, last time I looked at them, it was an hour and a half before the close. So they could have fallen out. All right, MU. MU has been on fire. In fact, let me show you the daily chart. Okay, so came up, hit its head on this fire line, and now it's pulling back a little bit. It is still above +3 ATR, but look at what's happening. It's coming right down into this daily 5. It has a high compression squeeze, which is not my favorite, but that's okay. If it can move into a red dot OG squeeze while it's coming down to this daily 5, maybe you can get a trade on it for next Friday. Another one that I found was Riot. Let's take a look at the daily. Another high flyer. So look, under normal circumstances, that is not something that I could trade in my normal type of swing trade where I'm going 30 to 45 days out. But if it has, come on, where'd my chart go? Uh-oh. Let's try this again, see if I can get that chart back. There we go. All right. Oh man, look at that. That's beautiful. This is what I want to see. This is what I want to see. Well, it barely came, it didn't have to go down that far to meet the daily 5, but it is just riding along that daily 5. And then we've got that beautiful squeeze. And Riot's only a $24 stock. Let's see how much the calls are. What's nice about this, assuming that it's liquid enough, is that if you have a small account, you can just buy the calls. Yeah, oh gosh, there's plenty of open interest. Take a look at this. I'm gonna bring over my options chain right here. Check this out. So there's a lot of open interest right here at the $25 strike. And it's pretty close to that. Let's see, where did it close today? Closed at 24.62, so it's going to be in the money pretty quickly. So, if you wanted to go for more open interest, although look at these, even though there's less open interest on these, there's only 328, that's fine. It's not spready. So you could go in the money. If you have a larger account, you could get a few of those. I like that one. That looks good. That looks good. I'm kind of kicking myself that I didn't get into this this afternoon. Looks really good. Couple more for you. Texas Instruments. So look, it's got the daily or the 30-minute ideal squeeze setting up, but it's still a little bit too far away from that daily 5. So I either need for it to pull back to the rising daily 5, or I need that daily 5 to come up and meet it. That squeeze looks great. That squeeze looks really great. One more thing to think about, because, and I'll go back to SPX, because we are so high up right now, volatility is relatively low, VIX is low, means puts are cheap. This could be a time to put on a hedge. Now I want to explain, there's a difference between a hedge and a bearish trade or a short trade. When you put on a bearish trade, it's because you actually think that the market is going to go lower. When you put on a hedge, it's more like a just in case. I have a lot of longs in my book, and if something goes sideways, if the market does decide to roll over, and by roll over, I mean come back to the daily 21. We're not talking about a crash or anything, but just in case, if the market does decide to pull back, I can still keep these longs and make up for it with my hedge, right? I can have a bunch of longs in my book, and while those will be losing money, I'm going to be making up a little bit of money on that hedge. It's just insurance, so you don't want it to be expensive, Okay, that would be more like a bearish trade if you thought that the market was actually going to go down. Just as a little hedge. So just something to think about. And look, you can, what I suggest is that you do it in one of the indices. So NDX, QQQ, SPX, or XSP. And I'll show you, I love trading XSP because I'm in the small lot trading room where we are working with small accounts. XSP is an index, which means it cash settles just like SPX does, but it's 1/10 the size. So you could get a 740 butterfly. Look at this. This is 10 wide. It's only 84 cents. This is for the end of the month, May 29th. And it's just, it is looking for a pullback to 7,400. Just, or pardon me, no, it's at 730. Pardon me. Correction. So it's centered at 7,300. So we're not even talking about a full-on pullback to the daily 21. But because it's 10 wide, it's the same thing as a 100 wide in SPX, but 1/10 the debit, also 1/10 the max win. But you could put that on for a very cheap hedge. We're talking about 84 cents here. Max profit would be $1,000 if it pinned. You don't need to have it pinned though. Just, get a couple of these and scale it off for a few $100 and call it a day. All right. So just something to consider if you do have a lot of longs in your book. This is kind of a good time to put on a hedge. All right. So that is what I have for you today. Thank you so much for watching, and I will see you in the trading rooms. Thanks, traders.